Hi, welcome to the Market Alert for Wednesday, the 8th of February 2023. So yesterday Powell spoke. The market's reaction was this. Jay's jawboning jolts bonds, triggers golden crosses in stocks and Bitcoin. It might be the case that we have to raise rates more than is now expected. Well, what a surprise. But it depends, of course, on where they're going to raise them to and at what increments as well. But that was the net effect of his speech yesterday. US stocks ultimately finished higher after whipsawing on Powell remarks. There was a bit of whipsawing. You'll see that in a moment in the implied volatility. And market stands to the sound of Powell as well. So, it was a bit of a whipsaw session at the end. But overnight, the markets have moved higher. News today, another FOMC member, Williams, is speaking. He's out at 9:15 a.m. I'm just going to check that because that doesn't look right. That's more like it. 2:15 would be the case. So this afternoon, Williams is going to be speaking. And then we've got a couple of other news items. We've got an auction and Waller is going to be speaking as well. Okay, let's have a look at the market's reaction to all of this yesterday and see what we can deduce from it and what we can expect going forward. And we'll kick off with the Dow Jones. So in the Dow, you can see yesterday, strong move to the upside for the Dow and up overnight as well as I record. So look at this in more detail by going down to the 30-minute chart. There you can see the market was down all the way until 2:30, and then it didn't quite make the Monday low. Found its support at the S1, then did its retracement, then Powell, and then came all the way back down as well, and then all the way back up. So it was a whipsaw session following his statement yesterday. And the market putting in that new high there of 34,251. The market currently sitting at the 5-bar moving average in the 30-minute chart. It's got the close and the 20-bar moving average. Any move to the downside will be picked up at the DP and the 200 MA as well. So it looks like the market's interpreting this as a positive thing for some unknown reason. It should be the other way around, but it's not. So the market continuing to move to the upside there, as you can see in the daily chart. And we've got these two areas of resistance to the left. And this, if we were to measure from there to there, we can see we're in that sort of 89% retracement area, which is this line actually, more or less, give or take. The market will need to drive through this in order to get back to the high that we see over here that was made on the 13th of December. In the implied volatility, this spiked up yesterday to 1649 from the 475, and that's because of the whipsaw action in the market. So if the market moves up today, you can expect to see this move back to the downside. But a spike up there yesterday, very interesting indeed, coming off those lows. And that's, like I say, because of the whipsaw action that we saw during Powell's speech. In the German DAX, I've opened the chart up a lot here. I'll compress it in a minute, but I just wanted to show you what's going on inside here. We've got the market retracing here on the Dow news there, so let's just draw some fibs in. This is going to be an interesting area if we get to 15,512 and also that 78,482 as well. The recent high will also be interesting as well because that will give us the high back to, if I just compress the chart and bring it all back, that will bring us back. I'll have to go to the weekly chart to see this. If we go through here, then we're going all the way back to this resistance to the left here, and that takes us back to, let's just have a look at the dates, February of last year. So the markets are trading back where they were this time last year at the moment. You've got this 89 as well at 15,800. So in the daily chart again, like I say, in that smaller area, just bring this down and then draw in the retracement there. You've got these levels here. Let's just widen this out so you can see the targets that we've got, and just make this a bit bigger as well. So these are the targets that you're looking for. Again, that 512,482 level. In the 30-minute chart, You can see yesterday we sold off to begin with. We then reversed and came back to the DP. This became a resistance area, and once we broke the 200 MA in the 30-minute, we traded all the way down to Monday's low. Once we got to Monday's low, the market did a massive reversal off here, coming back up over 100 and odd points, and then retested later on with Powell back to that low. Market bounced off the low again and then took out the high, putting in a new high for yesterday, and we're already above this and sitting at the R1, where we got just a bit of weakness coming into the market. It's overbought as well, it's going to be seen there, but making its way back. So the market's still pushing ahead. The European markets are very strong by comparison to the US ones, and this is seen as of yesterday. In the S&P, similar to the DAX, we've got this retracement going on here. We're currently at the 78, 89 not been taken out yet, or the high that was made last week. But the market again showing strength overnight as prices have held and moved up there, which you can see, but not above the high, the same as the Dow, but the DAX is, and moving in a sort of a sideways but high, making higher lows there for the S&P. In the FTSE, well, we're back to the all-time high. We're going to make another one this morning, 7913. They're going to open this and take out the high for the FTSE. Well, in fact, they've actually done it. That's why I was hesitating. We're already at 7915. Let's go down to a smaller time frame and have a look at this. What's the high of this bar here? Open high, yeah, 7913. We haven't quite done it yet. We're just about to, that because this line is still on here as well. That goes back to the all-time high. So we're just about to take out the all-time high that was made the other day at 7913. That's just showing the bid and ask difference in the spread. So yeah, we're getting close to taking out that high, another all-time high for the FTSE. Insane, but it is what it is, I'm afraid. In the currencies, the GBP JPY down at the 78% retracement for yesterday. We've got the CPI next week from the US, and obviously the dollar moving up a bit again yesterday, sending the GBP JPY back to the downside, down to the S3. When markets get down to the S3 or to the R3, the market tends to find it as a support or a resistance depending on which direction, and then move off it, which is clearly the case that we see for yesterday. In the pound, the market obviously quite volatile yesterday, with the dollar being volatile on Powell's comments at 5 p.m. Market finding support at 78 and also at close to the 200 MA in the daily chart. In the 30-minute chart, we see prices moving down to the S2 and then trading straight off this and then back. You'd think that was a stock chart, wouldn't you, to look at that? Following the pattern in the Dow, and then overnight the market sitting at the close, nowhere near yesterday's high at the moment. In the dollar, this is the daily chart of the dollar there, which you can see that we got a bit of, get rid of that. Got a bit of weakness coming back in yesterday with Powell, volume high as well there in the daily chart. A bit of weakness overnight. Let's have a look at the 30-minute chart. Let's just find it. There we go. So there's Powell's reaction last night. The dollar selling off, bouncing, but continuing to move lower now, which I'd expect that to do given the comments. But again, it just depends, doesn't it? It's a long time between now and the next rate decision, and also we've got the CPI in between that as well. So in the metals, finding a bit of support as the dollar declined. Got some demand there for the silver price. It's been absolutely crushed, hasn't it, over the last few days? $2.50, nearly $3. 30-minute chart yesterday, choppy, very, very choppy, but coming off the low many times during yesterday's session and moving back, but nowhere near yesterday's high yet at 22.44. Decline in the dollar will assist in doing this, though. Same for gold, hammered to the downside. Demand there, though, and oversold. and upside targets for the gold price there back on the upside. They didn't want it to get above 1950 or stay above 1950 and go back to 2000. That's why it was crushed. And there you can see the volatility in this market yesterday as well. So we were down, and then we had Powell where we were up and down with his comments. It's bizarre. The algorithms are so good now, they can pick up on the comments and alter the prices instantaneously. It's a different world to when I first started trading back in 1991, when everything was, well, there wasn't even the internet. It's a completely different world, day and night difference, and it's becoming more and more sophisticated. You know, you'll see the prices move rapidly on the chart, and that never happened back in the day because everybody got the news item at the same time, whereas the algos and the high frequency trading algorithms can pick this news up now. They're not just designed for price, but also to trawl through the internet, and whatever comes up they can actually use that to set the market direction and tone, along with, of course, the Federal Reserve's trading room, the plunge protection team. So yeah, different world, and well, we can see that also by the manipulation of the silver price and how low it is. You know, it's at $22. Was at $50 in 79, $50 in 2011. We've got inflation running at 18-20% for food, and everything else has gone up by 100% if you're looking at building materials, and silver is still 60-70% cheaper than it was in 1979. So if that isn't blatant, I don't know what is. Anyway, that will do it for this one. See what Waller's got to say at 2:15, and how the markets will, what they'll make of it. No doubt try and move the markets back to the upside until we get the CPI numbers next week. Okay, that's it for this one. As ever, thanks for watching. See you in the next one.